AutoLine After Hours is brought to you by Bridgestone Tires, solutions for your journey, and by Borg Warner.
Hey, Gary.
John, how are you?
I'm doing well, and I'm doing well because I can't wait for the show to start. And the reason I can't wait for the show to start is I don't know where today's show is going. Usually we have a theme or something like that. I can't wait to see how this one goes.
All right, so I'm gonna throw something at you right now before we have our guests on here, and this will cause you to think a little bit and get your observations on this. So it so happens today is August 24th for those who are watching not live, and so on August 24th, 2009, the Cash for Clunkers program came to an end. Now, the program started on July 1st, 2009. It was funded with $1 billion, and they thought that was going to run until November 30th. Well, at the end of July, the money
was gone.
The money was gone. So they added $2 billion to it. Okay. And still, it ends far before it was supposed to end. Now, this basically, for those who are not familiar with it, it was for people to trade in cars that were drivable, less than 25 years old, and they would get a voucher that would be for $3,500 or for $4,500 to buy or lease a new car, and it would be a car that would have be under 45 grand and get at least 22 miles per gallon combined. So it was economic stimulus and it was environmental stimulus. So what does that sound like? To me, it sounds like the IRA, right? I mean, yeah. So what we're saying is that, okay, if you buy a vehicle that is under a certain price and it is an electric vehicle, the federal government will give you $7,500. So here's my question to you. Many people concluded that all the Cash for Clunkers did was sold about 370,000 more vehicles during July and August than would have otherwise been sold. So it was, not all that robust. My question to you is the IRA essentially a Cash for Clunkers scheme?
No, I don't think so. I mean, remember the idea behind Cash for Clunkers, number one, to give a stimulus to the auto industry because everything was melting down financially. But also, remember the 20% oldest cars account for 80% of the emissions. So the whole idea was, wow, you could have a big environmental impact by getting the old clunkers off the road. Short sidebar, my favorite story told to me by a Ford dealer, because remember, those clunkers, you had to make them undrivable because what the government didn't want was shelling out money to take clunkers off the road and have people buy new cars and then secretly sell the old clunkers. So Ford dealers had to pour what was essentially Drano into the radiator so that the engine would seize up. And this Ford dealer was telling me they were trying to kill this F-150 that had a V8 in it, and they kept pouring more and more and more stuff in it. The engine just kept running. They couldn't kill it. But yeah, I think the IRA is it's really more of a national security move. It's to get the U.S. off of dependence on China for EVs, EV batteries, raw materials, all that, and build up a U.S./Western allies, Western, and of course, including Japan and South Korea. It's more that. I think the goals are different, completely different.
And let's bring in our guests and see if they have any observations on this subject.
That's right. We got Paul Eichenberg back on the show. And for the first time ever, Hannah Lutz from Automotive News.
Hi, thanks for having me.
Yeah, great having you.
So
Paul,
what do you guys
good seeing you again.
Yes, great seeing you too. It's great to be with both of you. So thank you.
So
well,
Hannah,
I think a big part of the IRA and the discounts in particular for EVs that you mentioned, the credits, I mean, it's really an incentive to get people to buy EVs. It's an environmental push, and people aren't. The mass market is not going to buy EVs at such a high price point, like they were selling, I think these credits are necessary to get the mainstream into electric vehicles.
Yeah, but I agree with what John's talking about. And if you look at what's happened here recently with semiconductors and the movement that the country's taken around semiconductors and these advanced AI technologies, et cetera, it is a big national security move. It's building this business around really the future of mobility. And I think it's something that's really essential for us here to really start to move to the forefront of electrification and this dramatic shift in technology.
Yeah. So here's a question. We'll start with you, Hannah. Is it working? Is the IRA working? What do you think?
I think so. I think it has, in terms of EV sales, I think it has increased the interest in EVs. We know that production isn't quite as fast as it is for internal combustion vehicles, and dealers have a learning curve here. There's some consumer skeptics out there, but I think it's helping that way. And it's just putting the focus on the US for EVs overall, like in terms of the supply chain. It's really creating more of a domestic focus. So in those ways, it is working, but it will take a while to build all of that up.
Yeah. Paul, what do you think?
Yeah, I agree. I think if you look at the supply chain when it comes to lithium ion batteries, or if you look at even cell separators. If you take account a cell separator, that's an industry that's all based in Asia. We don't have, even that type of infrastructure in place, let alone the cathode, anode, materials development, et cetera. So really building that value chain of the future is critical for the industry and critical for us to be competitive when it comes to making those vehicles and really, again, the proliferation of this, green, safe technology.
What do you think, Gary? No, wait. No, what do you think? You brought it up.
I'm going to be the devil's advocate here. Okay, so you guys are all saying, oh, this is a good thing. This will make people buy more EVs, and this is a wonderful thing. Well, yeah, if somebody's going to give me a $7,500 tax credit to get something, then I'm like, oh, that's good money, right? And yet, if we look at the first half of this year, approximately 60% of all the EVs sold were Teslas. Teslas just selling like mad. And that was even before there was money available for Teslas, right? So it's the desirable product that people will buy. It's not necessarily like, oh, here's some money to buy this vehicle. And what I look at it from the standpoint of that, yes, if money goes to encourage manufacturing of batteries and the associated things necessary for EVs, yeah, build that up, that's for sure. And then when that comes online and that makes vehicles more affordable in this country, then maybe if people want to buy EVs, then they will actually buy EVs without any incentives. So, I mean, I just look at this as like, oh, let's just shove a whole bunch of stuff at this and see if it works. I don't know that that's necessarily the right way of going about it. So
yeah,
it's
but
sort of
Gary,
go
ahead, Hannah. Go ahead.
It's sort of a chicken and egg situation, though, with charging, because the U.S. needs to build out the public charging infrastructure still. I mean, the chargers that are in place now, besides the Tesla chargers, often don't work. So I heard anecdotally from a dealer that his customers who he's in, I think he's in Texas, his customers who bought EVs like 3 years ago or so, they're now coming back to return their lease or get into something different, and they're not buying an EV again. And that is because, not because it's a bad car, they really liked the vehicle. It's because they had too much trouble with charging.
Yeah, and I think this is, Gary, to sort of build on what you were talking about, the industrialization in the shift in technology is so critical to this, because if you don't somehow create a stimulus around that, you really never get there. And if you look at, an OEM like Tesla, they've invested heavily in invest heavily in industrialization, and they've brought the cost of a kilowatt hour down at levels that nobody expected, 5 years ago, before the end of the decade. So it's the industrialization that is really critical to drive, the movement. And frankly, if we don't do it, and this gets back to what John was talking about earlier, if we don't take that aggressiveness here in the US with a stimulus coming from the government, how are we going to compete with China? How are we going to compete with European markets that are investing heavily to really create a certain amount of supremacy when it comes to the technology associated with EVs? So I think this is the issue, that this is stimulus to sort of get the ball rolling. But at the end of the day, when you start to industrialize that, you're going to have a much more cost-effective situation than what we have today.
That's exactly right, Paul. And, the Chinese didn't get there by relying on market forces. There was massive government subsidies on all levels: batteries, electric motors, automakers, charging system, swappable battery stations, all heavily government subsidized. And now the Chinese dominate because of that. They bit the bullet. They had a great plan. They've executed really well. They dominated. We now have to play catch up from a national security standpoint. I've said this on the show before. I'll say it again. When the U.S. military drops our warfighters in a combat zone, each one of our warfighters has 18 pounds of batteries in their kit, in their gear, night vision systems, communication, that sort of thing. And where do you think most of those batteries come from? And if the batteries didn't come from China, the materials that were used to make them came from China. So it's a national security issue, and we don't have time to let the market figure it out. This is where the government's got to step up and do it. IRA is really all about, ostensibly, it's a climate change effort. But I would say the real underlying effort, in which has gotten at least some amount of bipartisan support, is that it's a national security issue.
Well, and I think, John, if you think about just a week ago, the Treasury Department came out, hey, when it comes to AI technologies, when it comes to semiconductors and these microelectronics, the Treasury Department is now going to enact legislation which basically will not allow organizations to invest in that in China. Same thing back in October last year. They did the same thing and said, well, hey, when it comes to technology, we're not going to supply that technology into China. So all of this is stemming around this idea of technical supremacy. It's not just for military. It's for, the situation, data monitoring. It's for artificial intelligence. It's for, a lot of reasons around just not national security, but also, this is the new Cold War that's starting between the U.S. and China. And the technology that we use for semiconductors can have a huge impact on limiting the advancement of their technology. So I agree. I think all of this is part of a broader program, not just to get cars on the road, but really help establish some barriers to enter for the Chinese economy, which is also becoming quite powerful around the globe.
All right, before we get all socio-political here and ideological, and obviously I'm the only free market person on the show, but we'll just leave that aside for the moment. So Hannah, Automotive News reported a week or two ago that Experian numbers show that the sales of EVs in the U.S. is approximately 7%, which, it was 7% last year. Yeah. So it doesn't seem to be going anywhere. So I mean, what's your take on that?
I think there's a few things happening. For one, the launches aren't really going as planned. Ford, I know, said they're going to start ramping up Lightning production. GM has had issues with the Hummer and I believe the Lyriq too in battery assembly. So this is automakers have been building vehicles for so long, but this is still a new technology and new powertrain. I think the kinks are still being worked out. So that is what is holding a lot of this up. And the supply chain, there were some delays there that have gone on as long as, the chip shortage started a while ago. They're correcting themselves, but they're still there. So I think those things are holding back sales, along with some of the early adopters, the dealers are saying, have bought and now they're gone. So now the dealers have to sell to a mainstream audience that might be more skeptical, have a lot of questions, might have more limited charging access. So there's a lot at play. It's hard to even come up with a generalization because there is so much happening. We're still at the early days, and it's very much evolving.
It's
Hannah,
interesting. It was interesting you said earlier about how you talked to that dealer and the people are bringing, coming in for their next vehicle and it had an EV and they're saying, it's too difficult to deal with this. And Farley has recently said, but after they drive an EV, they'll never go back to anything else. And this is what he's counting on. And then he's in his other breath, he says, but by the way, let's look at hybrids.
Yeah.
It's like, wow.
Well, I think
the rhetoric
so
is getting
much
ahead
of
of the car.
Yeah, so much of it is geography. So this dealer I talked to is in Texas, the center of oil and gas. The charging infrastructure isn't as robust in Texas as it is in somewhere like California. So maybe in California, Farley is right. The car buyers, who buy an EV are coming back and they want another one. I could see that. But it really depends on the situation where you live.
Yeah, remember we had who'd we have on a week or two ago, and they were talking about that EVs loyalty rate is about 65%, which is very high. That's above the industry norm for any given brand. But that included Tesla. And when you took Tesla out of the equation, there's Tom Libby, right? And it was then it drops to 50%, which is kind of about where ICE cars are. So maybe that shouldn't be too surprising. But the loyalty rates depend on Tesla to look really good.
Right. So that's like, I'm the tallest guy in this room right now. So I mean, it's just like, what does that mean? I'm the only one here.
But one thing, Gary, you're right. Last year, at the end of the year, we ended up at 7% market share. But halfway through last year, it was more like 4%. So the fact that halfway through this year, we're at 7% suggests to me a rather substantial increase. And I'm curious to see where we end up this year. I've been predicting we'll end up at 10%. We'll see if that comes out. But Hannah, you did a story recently, right, on looking at these rising inventory levels where people say EV sales are slowing. So tell us what you found.
Sure. So yeah, we saw some day supply numbers from Cox that were pretty, they weren't surprising, but if you look at the number alone, it could be kind of jarring. You really have to put all the pieces together to see what's happening. So of course, day supply is going up because dealers are going from like 0 to 10, whatever it might be. So that number is increasing, but that doesn't mean that demand is slowing. There still is demand for EVs. Probably all of the orders that have been placed for the EVs are already have been completed. So like I was saying earlier, now the dealers have X number of EVs on their lots, like probably usually in the single digits or low double digits, but they really have to sell them. They're not pre-orders. They're vehicles that they have to say like, hey, have you thought about this ID4? So it's just a different scenario than they are used to. And they have to learn how to answer customers' questions about EVs and really sell them on charging, which is difficult. Home charging is a pretty easy sell, but public charging is trickier.
Also, there's some funny business with day supply right now, right? Because of a shortage of trucks to move them. So just so everybody knows, day supply starts the minute the trucks or the cars or the vans leave the factory lot, not off the line, but off the lot. And so that's cars on trucks, cars at railheads, cars on trains, cars in transit, and then cars at the dealership. And what I understand right now is there's a lot more vehicles in inventory that are in transit, i.e. just sitting there because they can't find enough trucks to move these things. So that's causing an increase in day supply.
Yeah, exactly. And the day supply calculation, it's sort of, I'm not going to explain, it's sort of complicated, but it doesn't give you a great look at launch vehicles because there's not much to compare it against. And most of these EVs are just launching. So it's tough to look at day supply and get a full picture of what's going on with EVs.
Great point.
So Paul, when we had you last on the show, you were the first person that I heard, and this still resonates with me. And I'm sure that it probably is causing many people who are actually involved in this having sleepless nights, and they haven't slept for the last 3.5 years since you said it. But you were talking about this shift away from internal combustion engines to EVs and the ramifications it has on manufacturers of conventional products. So since we've last seen you, what's your assessment of how that's all shaking out?
Well, I think, again, Gary, as you know, when I started to talk about that shift, people were like, yeah, that's never going to happen. And of course, what are we talking about? We're talking about, John specifically saying, hey, we think EV sales are going to be 10% of all sales this year. Okay. There's talk it's going to be, by the end of the decade, 30-40%. So is it happening? Yeah, it's happening. So what I would tell you is for the big tiered automaker or big tiered suppliers and the automakers, definitely are moving down that path. If you think about it, auto tech has been decimated as a result of all the investment shifting to electrification. So you look at autonomy, as a matter of fact, back in 2015, 16, 17, all the investment was going into autonomy. That's where all the excitement was. Uber and Lyft were going to rule the world. Now look at the state that we're in today. So yes, we still spend a lot of time with suppliers. I would tell you the big tier suppliers, are well on a path towards electrification. Just think about Borg Warner having a split, just a month ago. A lot of activity to go to separate the electrification and the powertrain businesses. Now it's really going to start to impact the smaller suppliers. And I think to build on what we were talking about earlier, there has been disruption over the past, few years, not just semiconductors. Now you're having disruption in these supply chains, getting product to where it needs to go. I think we're really going to see a lot of disruption here starting next year and the following years. As these volumes uptick, you're going to have two huge disruptions that are going to take place. One around, the drop off of powertrain components, highly capital intensive. Companies are going to start going underwater, keeping up with the amortization of equipment, et cetera, et cetera. So you're going to have it as that volume drops, but as volumes increase and these new supply chains have to come up to speed, you're going to have a tremendous amount of disruption there because there's going to be companies that just can't keep up with the demand and are going to create bankruptcy issues, not just on the downside, but the upside associated with the technologies. So I think we're really headed to the next several years of a lot of disruption in the supply chain as a result of, this shift that's taken place.
Paul, do you think that the supply chain is going to end up in the hands of private equity? You mentioned Borg Warner, Continental's done the same, Bosch to some degree. They're spinning off anything to do with ICE or just about anything to do with ICE. And then as volumes drop with ICE, especially the tier 2s and 3s, they're going to be enormously financially stressed. And we can get into that in a minute. But it looks to me like private equity is just licking its chops saying, and wow, we can swoop in, buy these companies for pennies on the dollar, consolidate it all, and then we can tell the car companies what they're going to pay us for the parts, not the other way around.
Well, I think there's two things going on there. So I absolutely agree with you. And if you look at Apollo purchased Tenneco. Tenneco is in a situation, well, what do we do with this business?
And Apollo's private equity, right?
Yeah, Apollo's private equity. So Apollo's a big player. Gamut Capital is another who bought Iron Foundry Grady. you start looking at this, they are starting to enter in the space, and we've worked with a number of them. And if anybody's out there that says, hey, I've got a powertrain business, reach out to me, and I will start to broker a deal for sure. Because there's capital out there, as you realize, John, there's capital for this. And the situation that you get into, and even, so many suppliers in this world, as far as the whole internal combustion engine ecosystem, it's a $450 billion market that really needs to start a consolidation. And so, yes, private equity is going to become a big player in that. I think the OEMs are going to have much bigger hand in the consolidation activities that are going to take place. But also, I would tell you, and this was one of the topics I think Gary wants to talk about, is as you move into this UAW negotiation, my sense is a huge bargaining chip's going to be, of course, the UAW gets to unionize all those, Korean battery JVs. But then in addition to that, what's going to end up happening is the automakers are going to start to also bring to the table, how do we get rid of these, powertrain assets that we have? Whether they're die casting operations, whether engine, transmission manufacturing. And I think that's going to be a big part of the bargaining chip that you're going to see between the OEMs and the UAW when it comes to
and
this
Paul, the OEMs don't want to talk about that. They don't want to talk about it publicly. And I've tried to get them to talk about it privately.
Right.
It's like a red hot issue. They do not want to touch it, at least not at this point.
Right. But I think that's what's going to become the trade-off. You're going to start to see the union say, hey, we want access to all these battery JVs. We want access to that because that's the future. What the OEMs are going to say is, okay, we want to be able to start selling off these manufacturing assets that are heavy UAW. We can't broker a deal unless there's some type of concessions that start coming from the union. And I think that's what you're going to start to see as far as the bargaining between the two parties when it comes to, the sunsetting of the internal combustion engine.
All right. Again, devil's advocate. So I want you guys, John and Paul, I want you to explain to me. So this year, General Motors announced it is investing $854 million. This isn't chump change. It's maybe not EV money, but it's not chump change. $854 million for a new small block V8 engine, internal combustion engine. So nearly $1 billion.
Right. So, and in fact, there's some transmission investment that's on top of that. And I can't remember another investment. It's well over $1 billion that they're putting into it. And look, everybody knows, especially I'm sure this V8 is going to be for medium and full-size pickups and SUVs. And
where they make all their money.
Where they make all their money, exactly. And whose customers tend to drive long distances and who tend to do a lot more towing. And, electrics just aren't ready for prime time yet. Maybe they'll get Mujib's, range extender battery that will get there later in the decade. But right now, I mean, you're going to make all your money on internal combustion engines, and GM's no dummy, even though Mary's all in on electric. They've got to make big profits on the big ICE vehicles to pay for the EVs.
Yeah, I agree. I mean, it's a game like John was talking about. And, I think Hannah was talking about it earlier. Geographically, you've got some areas which just, don't lend themselves, like Texas, to EVs. I don't know if you followed this, but a couple months ago, there was legislation brought forward in the Wyoming state, Congress that they wanted to put a ban on EVs by 2030. Just the opposite, of course, of what the Biden administration is pushing for. Now, if you've ever been to Wyoming, you understand, where are you going to put charging infrastructure? How can you even think about this? And again, they're an oil and gas rich environment. So, it's going to work in certain segments of the country really well as far as the shift to electrification, and it's not in others. And I think you got to be pragmatic about that.
Yeah, that does make it tough for the automakers. GM's strategy has kind of been the same all along since they announced their commitment to EVs. They've always said that they would have to, and they would willingly rely on the profit from their larger vehicles that are powered by internal combustion engines. But it must make it difficult for suppliers to navigate as well. Are you experiencing that with your clients, Paul?
So what I would tell you is, so in the powertrain space, where you want to be, and we just use transmissions, you want to be on the 8, 9, and 10-speed transmissions. You want to be making those parts because those are the last ones that are going to convert. And frankly, as you sit down and you talk to suppliers, you'll see two reactions. At least we got that 8, 9, 10-speed transmission business, whether it's clutch housing, clutch packs, whatever the component is. Then there's the others that all that we're left with is 6-speed business. And they realize they're the first. If you look at an organization like Magna, where I come from, in Europe, they bought the Getrag business. It's all dual clutch, 7-speed, 9-speed, but those are going in vehicle segments that are the first to.
Paul,
We just lost his saying the important stuff.
Yeah, you might be muted. No, still don't hear.
How is that?
Hey,
Now
you're back. Okay. So you're saying Magna with the dual clutch, and it's going into vehicles, that are the first that are going to go electric. That's the last we heard from you. Oh no, you're gone again.
Okay,
Yeah.
Okay, I'm having an issue with my headphones.
No, we can hear you now.
Okay, so all that I was saying is for some suppliers, it all depends on the mix of the product that you have. So heavy dependence on powertrain components that are sold for, these, European style vehicles, Asian based vehicles, etc. That's going to transition much faster than you are for those who are providing components to trucks and SUVs and these bigger platforms.
Yeah. Hey, look, we got to take a quick commercial break, and we'll be back right after that to talk about more of these things.
How do Bridgestone tires stop shorter on wet roads? It's their HydroTrack technology. But you don't have to know how the science works, just where the brake is. What really matters is their Bridgestone.
All right, we're back talking all things in the automotive industry here.
All right, so we're talking about investments and things like that. So I want to switch it just a little bit here. So last week, the Vietnamese company VinFast had an IPO, and it started out at $22 a share, and like Monday, it was up 128%. Okay, now here's my question to you guys. We saw Lordstown Motors has filed for bankruptcy. Lucid's had to go to the Saudis again to get more money. It's not clear how Fisker's doing. Nikola had to recall all 209 of its battery electric semis and is given a warning that it may not do so well this year. I'm thinking things are not looking good for that. So my question is it possible for there to be companies, new manufacturers, that will truly be successful in the long run, or is this all short-term stock trading phenomenon?
Go ahead, Hannah.
That's a tough one. I mean,
That's why we have you here for the
That's
tough
right.
ones.
Obviously, Tesla was a newcomer at one point, and it's become very successful. But no, we haven't seen that same level of impact from anybody else. I think that sometimes the tech companies and new entrants in general, they don't appreciate or don't understand the manufacturing skill and insight that's needed to make cars. It's not just technology and software. Those two things are becoming much more important, and the automakers need to get on board with that. But manufacturing is, something that has been refined for decades, for a century. It's not something that a new company can learn overnight. So I think we're seeing that.
Yeah.
Yeah, I think this is crazy, first of all. But if you look at NIO, if you look at Xpeng, if you look at Li, all these companies out of Asia at times were far more valuable than GM and all the sort of major players in the industry yet today. I think there's a certain circumstance here because the majority of the shares are still, controlled by the owner and a private investor. And because of the limited amount of supply, that's driven up some of the demand for the product, or for the stock. But to be honest, you cannot justify this type of stock valuation when you see the SPAC bubble that we've lived through on the auto tech side. I mean, auto tech is, as I said earlier, is dead. There's no investment. VCs can't raise investment. Businesses are shutting down because they're running out of investment. So I think, you can't really justify it other than the fact that people are looking at a limited investment window. I don't think the technology and the product is unique in any way. It's just that there's a limited supply, and I think that's what's really driven up a lot of the demand for the VinFast stock.
Yeah, I agree with Pete Dog. We saw his comment there. I can't understand this crazy VinFast valuation. The reason is that only 1% of the stock, 1% of the shares are in float, are trading. The founder of the company owns 99%. So you've got the whole market feeding on 1% of the shares, and it doesn't take much to drive the price way up or have it just collapse. And so we've seen in the course of a week, VinFast add like $30 billion of valuation and then lose 30 billion and then add 50 billion. So yeah, it's just nuts only because there's so many or so few shares in play. But, I think that what you got to keep in mind is Tesla lost money for a decade. They lost billions of dollars. They had no competition, and they're the best at it. So if the best at it with no competition takes a decade to turn a profit, why should we be surprised if it takes anybody else that long to do it?
Okay,
maybe
will they have a decade to do it?
Well, probably not. Probably not. But EV volumes are coming up, and as I've said so many times, this industry is all about volume. Once you hit scale, once you break that magic 80% capacity utilization and get above that, you're a printing machine. You just print money. And that's where Tesla is pretty much at right now. The question is, who's got the long-term patience to get to that point? American capital is very impatient. Remember, Wall Street, for them, long-term investment, that's the end of December. They consider that long-term. So to sit on investments for years at a time, waiting for it to turn the corner, American capitalism is not very good at that. It's more the Asians and even to a degree the Europeans who have a lot more patience. And look at how it's paid off brilliantly for the Chinese. I mean, they dominate the EV world. They were willing to have that kind of patience. Lithium batteries were invented in America. Rare earth magnets were developed in America. It's all owned by the Chinese now because the Americans sold it. They didn't have the patience to wait until they could commercialize it.
Going back to your point about Tesla, struggling for a decade, but not really having competition in EVs. Now these new entrants like VinFast, they have Tesla as a competitor and all of the legacy automakers who are bringing out their EVs.
Right.
Do you think any of them really have a chance, VinFast and the like?
VinFast, we'll see. I mean, you got one of the richest guy in Vietnam, a multi-billionaire guy. I mean, he can still keep writing checks if he wants to preserve his name and reputation. And he's probably got some sort of backing from the government to make sure that the Vietnamese brand stands well in the world. Gary, you mentioned the Saudi investment fund, foreign investment fund is a backer of Lucid. So it's going to take patience. I have people ask me all the time, oh my gosh, Ford's going to lose $4 billion on EVs right now. How can they possibly do that? And I said, don't worry. They're all losing billions on EVs. Ford's the only one with the courage to publish the numbers. They're all losing money. So it's now going to come down to a race to scale and the patience to get there.
Well, I think if you look at Kia 30 years ago, who would have ever thought, there'd be one of the most profitable, suppliers of vehicles here in North America. And I think when you look at the pitch that VinFast is making to those potential investors, it's, hey, we're the next Kia. And you know what? They're not trying to say, oh, we're going to be the next Tesla. No, we're going to be the next Kia. So I think if you look at that, it's a little different story. And if you're, like you said, you have a longer term, sort of investment horizon, that's a compelling story to tell, So yeah, that's where I think VinFast is coming from. But their product today isn't really prepared to compete well here in the US. But Kia wasn't initially either.
Right. Great
It's
point.
a really interesting time to follow the industry because we have all these companies that, could end up being really successful or could go out of business. Even like the battery companies. I think some of us were at the our Next Energy event last week, and it seems like a very promising technology. We just haven't seen it in the market yet. It's always fun to watch.
Yeah.
See, but it seems to me that what we're talking about largely is the development of vehicles that very few people are buying, but someday they will. And I just wonder how long it will be before this someday comes to fruition. But
and again, I go back to where we started the conversation, Gary, is look at the progress that's been made in the past 4 or 5 years. Right. When I probably shared this on one of the shows previously that I did, but it was a couple years ago, so I'll bring it up again. In 2017, there was a huge study that was done by the European Commission looking at, hey, when will cost parity be achieved by between the internal combustion engines and EVs? And they surveyed 30,000 executives from all over the industry to start to look at what that looked like. And in that study, what they found was what they found in that study was there was this cost parity was going to come by 2030 when we get to $100 per kilowatt hour. Now today, look at CATL, Tesla, all these companies are below $50 a kilowatt hour. So that's the industrialization, that's the investment, that's what's taken place. So I think what you've seen over the past 5 years is huge progress. Who's to say that that doesn't continue over the next 5 years, where there's this dramatic change because technology enabling things that just people couldn't expect 5 years ago.
Yeah, I think they're under $100 a kilowatt hour, not necessarily 50. But your point's well taken, Paul. They're on the path, and in 2025, 2026 timeframe, we're going to see a lot of the legacies come out with their second generation EVs built on truly clean sheet, dedicated EV platforms, built-in plants dedicated to only making EVs. You're going to see second generation batteries. We're going to see more of a preponderance of bi-directional charging, where you'll be able to plug your EV into your house, buy electricity at low rates, sell it back to the utility at high rates, maybe have no electric bill at all, maybe even get a check from the utility. So I think before this decade's out, there's going to be a buying proposition where even people who are anti-EV right now are going to go, Jesus, these EVs are pretty good.
Mm-hmm. All right, so you guys are talking in 5-year buckets. I'm going to have a 5-year bucket for you. This is from S&P Global Mobility, not from me, but this is what they came out with. Okay, so they're saying right now, hybrids, 7% of the market. In 2028, 24% of the market. Oh, hybrids, but nobody wants those. Those are terrible vehicles. They're not even good bridges. They say 9% EVs for this year, so they're optimistic. They're above the 7. They're at a 9%. They're saying it'll be 37% EVs in 2028, and that right now, ICE vehicles account for 84% of the market, going to 40% of the market. Okay, so the thing that isn't maybe obvious about this is that hybrids have internal combustion engines, which makes it 64% still ICE.
Right.
So how is this working out for the EVs again?
Well, it's a stepping stone. I mean, or maybe a long-term solution for
I'm sure I'm being hated in the comments here, by the way. All these people are flaming me.
Well, there's so many concerns, so much range anxiety with EVs. If you have a hybrid, you get to experience part of the EV flavor while still being able to rely on gas stations when you need it. So I think hybrids will help EV sales long term.
And so would you buy one, Hannah?
I would consider a hybrid. I would not consider an EV right now because I cannot install a home charger, but a hybrid, yeah, I would consider that.
How about you, Paul?
Actually, my next vehicle will be an EV for sure. So,
okay, will this be a second vehicle or will this be your primary vehicle?
My primary, let's put it this way. It'll be my primary work vehicle. So it'll be my vehicle, the family vehicle. Probably we bought our last year our SUV, gas engine, recognize it was probably the last vehicle like that we bought. But the next, sorry about that. But the next vehicle, the next SUV will probably be an EV, and the next vehicle I buy will be a vehicle I use for work that will be an EV.
See, I don't like hybrids. I love the fuel economy. And if I'm just putzing around like a little old man, they're fine. But I'm an enthusiast. I like to get on them. And they got this mushy feel to them. The engine's trying to do one thing, the electric motor another, the transmission yet a third thing. I don't like the way they feel. So now if somebody came out with, and probably Ferrari's going to be there and Corvette's going to be there and the like, performance hybrids, maybe I'll like the way they drive. But I'm telling you right now, and I'm not dissing the technology, I'm just talking to my personal taste, because I agree with you, Hannah. I think hybrids are a pretty good solution. Plug-in hybrids are an issue all to themselves because we know that more than half the time, half the people never plug them in. So you're not, from an environmental standpoint, getting much benefit from that. Maybe that will change. Maybe we can go to some sort of inductive charging where people will not be inconvenienced in 5 seconds of having to plug their car in. They just drive over a mat in their garage or someplace. But yeah, personally, I'm not a hybrid fan. I just don't like the way.
John, we've already established you're an atypical driver, so we can't use you as a basis of anything here. But so this gets back to the point of okay, so Toyota and Lexus have 18 hybrid models, Hyundai Kia 7, Ford Lincoln 6, Stellantis 3, And how many hybrids does General Motors have? Oh, that's right, 0. But
In the United States.
But John, for you, yeah, these are United States numbers, but for you later this year, they will have the Corvette E-Ray hybrid.
Yeah, and that's probably the one that I'll like because that's not a fuel economy or an emissions play. That's a performance play. And I fully trust the Corvette engineering team to deliver a hybrid that even a hardcore enthusiast is going to love.
All right, so I want to stop talking about EVs and move on to another technology, and this one is in Paul mentioned this earlier, autonomous vehicle technology. So we didn't talk about this on last week's show, but last week the California Public Utilities Commission gave the thumbs up to Waymo and Cruise and said, hey, you can start having autonomous vehicles being used for cabs in San Francisco. And so one day after that happened, this is according to KRON Channel 4 in San Francisco, at least 5 cruise cars blocking traffic Friday night in the North Beach neighborhood. The driverless car stopped in the middle of the road, prevented travelers from driving around the traffic. Same night, at least 6 cruise vehicles were seen causing traffic near Grant Avenue on Vallejo Street. Then another, and this was due to, according to Cruise, wireless connectivity issues because there was apparently a big music festival going on in the area, and somehow the cars were incapable of communicating because all the people who were on their phones watching the music thing. Then there was a Cruise vehicle that ran into a fire truck, and then there was a Cruise vehicle that made its way into fresh cement. So, are we being too hasty here in permitting things like AVs on public roads?
Well, I think, Gary, haven't they also come to a point where the government had them pull half the vehicles off the road because of that problem? So again, I think what we've seen here, over the course of the past year and a half, and it's played out in the SPAC investment bubble, is just this technology is still quite a ways away from being ready for prime time. I think you see a lot of the vehicles, they're out after hours when they're not out in rush hour. They're out operating throughout the evening as far as their testing and everything, but the technology is still a ways away for really being a reliable technology. And as a result, some of that is the investment that was required to shift from that to EVs. You look at the end of the year, Argo being shut down as a result of just the technology difficulties and the investment priorities for Ford and VW. I think, again, this is a technology that is a ways away.
Hannah, what do you think?
Well, I'll plug Automotive News for a second. My colleagues, Pete Bigelow and Molly Boygon, have been following this in California over the last week, and there's more to come. They've done a really, really great and thorough job on it. Something that they highlighted in their reporting is that the robo-taxis are regulated by the state. So the city, San Francisco, is the one, and its residents are really getting the brunt of the issues here, but it's run at the state level. So just something to consider, like maybe there's a mismatch there. This technology needs to be tested for sure before it expands further. But at the same time, it feels a bit unfair to put the residents of San Francisco through that.
Yeah, I have a completely different view, as Gary is no doubt anticipating here. My advice to Waymo and to GM Cruise is get the hell out of San Francisco. Come on out here. Come to Detroit. We'll welcome you with open arms. You'll get all kinds of great publicity, and you're not going to have these snotty San Francisco residents, trying to diss your efforts here. All these problems with Waymo and Cruise get national headlines. I have never seen one national headline that quoted Kyle Vogt, who runs GM Cruise, saying their subscription base and ridership is growing 48% a month in San Francisco. So it's like the EV fires, national headlines, even though we know ICE vehicles catch fire 10 times the rate that ICE vehicles do, even on a per 100,000 vehicle basis. So there's this fixation on trying to find all these problems in the media with EVs, all these problems with AVs. I told Mary Barr this. I commend you for sticking with the program. You know, I talked about impatient capital, Ford Motor Company and Volkswagen with Argo. That was impatient capital. We're not seeing instant returns. Boom, let's dump this and go do something else. So I commend Mary Barr for sticking with the program. Yes, you're going to lose billions, but when you turn the corner, wow, watch out. You're going to make so much money.
All right, John. So I have a quote here from Captain Jonathan Baxter, who is the chief of the San Francisco Fire Department. The fire department strongly disagrees with yesterday's CPUC decision to allow commercial operations by the autonomous vehicle companies in San Francisco. We believe the ruling ignores public safety and emergency response interference that we presented to the commission this week, blah, 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 blah. The San Francisco Fire Department is not against modernization and new technologies, but any vehicle that endangers the people of the city and its visitors and puts its visitors in danger and put passengers between a fire engine and a fire is not ready for prime time. Respond to the Captain Baxter.
Get out of San Francisco, Waymo and Cruise.
He's the fire chief.
Yeah.
The fire chief.
Yeah. His truck is the one that caused that accident.
Damn fire truck.
Well, look, I'm not going to question what the police or the fire chief is saying. All I'm telling you is that this technology continues to make progress. The payoff is massive. Is it perfect? No. Will people get killed in AVs? You bet they will. Could it save up to 20,000 lives a year? Yes, it could. So what are we waiting for?
Evidently nothing.
Hey, look, we're close enough to the top of the hour. We ought to wrap it up on this rather than try to get into a new topic. What do you think, Gary? Or do you have something burning there?
Oh, yeah, I'll let this one go. This is...
Okay, we'll wrap it up. Hannah Lutz, thank you so much for coming back on, or not back on it, for coming on the show. We're going to have you back again.
Yes, thank you for having me. This is fun.
See, Hannah, I thought you were on before too, and John thought the same thing. So.
Well, no, that was a slip of my, slipping mind. But Paul, it's great to see you again.
Yes, thank you, guys. I enjoy being here. It's great connecting with you all again.
Okay.
Thanks,
that's
all.
a wrap, and we want to thank everyone for having tuned in.
AutoLine After Hours is brought to you by Bridgestone Tires, solutions for your journey, and by Borg Warner.
If you like this program and would like to learn more about the automotive industry, check out our website at autoline.tv or look for us on YouTube on the Autoline channel.